It does take us to our talk of the tape, the fate of the rally, which has gotten more narrow yet again. So is that a sign of an unhealthy market or one that is just taking another well-deserved breather? Let's ask Dan Greenhaus. He is Chief Strategist for Solus Alternative Asset Management with me here at Post 9. Welcome back.
Thank you, sir.
What's the story with this market? It's been a little bit of a dicey week. We're pacing down 1% on the S&P. Yields are down today, but they've been backing up.
Yep.
Been a little nervous. What's going on?
No, listen, we've had a really good run, really all year. The stat everyone seems to be tossing around, the S&P's up, call it 23 of the last 30 weeks. The type of run that you rarely have ever seen. There was a big rally off the 62 bear market that was comparable. Another one or two rallies you could find throughout history. So it's been pretty strong. Obviously, it's come alongside the backup in rates, so I don't really buy into the rate story. We've talked about that. But listen, there is something to the narrowness. It is being driven a lot by some of these AI names. Although I will make one final quick point.
Yeah.
The equal weight index is up, call it 3% through today. That's not great by any means, but it's average. So even if you want to balance out the overweight, so to speak, of Nvidia, et cetera, you're having a pretty decent year today. It's
not like it's dramatically narrowed. It's just Nvidia's outsized performance makes it feel that way even more. I mean, for over a 1 week period, for example, tech is up 1.5%. Like everything else is down.
Yeah.
Comm services 0.5%. Then you got discretionary down 1%, materials down 1%, utilities, energy 1.5%. Gets a little worse for financial staples, a little worse for real estate, industrials, and then healthcare is down some 3%.
So real quick on that point, there's a lot of people who come on the network and talk about rates, and stocks, and why aren't we seeing more effect or what this, that, and the next thing. But to combine the 2 points that we just made, to synergize, if you will, I think you are seeing the effect. Again, as I mentioned, the equal weight's up, call it 2.8, 3% for the year, perfectly average. If you look at the market that way in the context of the backup in rates, call it 380 on the 10-year up to wherever we are now, 4.5, 455, you have seen a dampening effect on the market. It's just been overdone. It's been overburdened, so to speak. That's probably not the right adjective, but we'll go with it, by Nvidia, by Microsoft, et cetera, et cetera.
Do you think what I just read you, the sector performance, is directly correlated to the backup in rates?
Well, I think
why tech has gone up, why there's been, I go back to what Tony Pasquarello-Goldman said, why mega cap continues to outperform and why the money continues to flow, because it's the sword and the shield. It's defense, offense, protection,
large cap tech,
advancement. Yeah,
yes.
Mega caps.
But listen, so yes, the answer to your question, rates does have an impact on flows and on valuations, but you've also had not great reports from Workday, et cetera, et cetera. So there have been some fundamental reasons. Obviously, there's disappointment today with Salesforce,
right? And ServiceNow, you see these stocks. You just don't see these stocks move like they're moving today. It's like if you've gotten a nice bump, and Salesforce hasn't really gotten that much of a bump, but if you've been up and theoretically it's on this AI halo, and the expectations have gone up with your stock price, and then you deliver a dud like they did, especially their outlook.
Sure.
The result right there.
Yeah, I mean,
20%.
this is the flip side of the environment we're in, where there's no tolerance for disappointment. But listen, I mean, any number of people who have come on the network today, I'm sure, and observed that it wasn't too bad of a report. I mean, guidance.
Sure.
I'm not a large tech investor,
but the market votes more than the pundit.
But yeah, that's correct. I mean, but obviously it tells you it couldn't have been that great or that average, or else you wouldn't be down, as we see on the screen here, 21%. But listen, you have seen pain throughout tech. Again, we listed a bunch of the names: Workday, Adobe, et cetera, et cetera. It's just the size of Nvidia, the size of Microsoft, and their performance. Google, obviously, their performance has been so strong, both fundamentally and with respect to price performance, that it's just overwhelming all these other names.
Nvidia is such an outlier on the week. It's up 6%.
Yeah.
Every other mega cap is negative except for Apple, and that's up just shy of 1%.
But listen,
of 192.
The positioning data, the flows to those names are still extraordinary. They're a huge portion of the market.
Yeah.
They are still, to borrow Tony's phrase again, the sword and the shield. They do give you defensive characteristics and offensive characteristics. And so I understand why, as a manager, you'd want to have a tremendous amount of exposure to them.